Welcome to NCB's Mortgage Live. I'm Dr. Terri-Karelle Reid, and I'm excited to be your host this evening. For those of you who are tuning in locally, please drop it in the chat. Let us know which parish you hail from. If there's anyone here from St. Catherine, how are you? Portmore for sure. And to our diaspora, if you are tuning in from outside of Jamaica, let us know which country you are tuning in from. So the topic that I'm excited about, apartments versus homes. It is a conversation, it is a discussion, it is a debate that has been ongoing. Is one better than the other when we're looking at budget, security, maintenance? Don't worry about it. All the questions that you have, we have the perfect persons, guests, panelists, experts to answer these questions. Now, before I introduce my panelists to you, drop it in the chat. What do you think? What's better to you, in your opinion, via your perspective, apartments or houses? While you do that, I'd like to introduce my panelists. Welcome to my home. I have Sandra Lynn, who is the sales manager, NCB Mortgage Unit Retail Banking Division. Good to see you. The last time we had our conversation, it was during the pandemic. Good to have this one-on-one. And Romach Reid, my namesake, Valuator JCI Property Solutions. Welcome to NCB's Mortgage Live. So Sandra, let me start with you. We have people tuning in from all over. We've read the articles, we hear the conversations going on with regards to apartments versus homes. Everyone has this ambition to become homeowners. What are some of the things you believe, the key factors we need to be considering, understanding that it's not a cookie cutter, one size fits all, but what are the key benefits for apartment and what are the key benefits when you're talking about a house?
Okay. Hi again, everybody. It's a win-win. Whether it's an apartment or a house, it's a win because you're investing into something that is worthwhile and valuable. And so it boils down to personality and pocket. The two P's, personality and pocket, meaning your affordability. What can you afford and what's your preference? So you find that someone may prefer a house because they want their own yard space. They want to set up their own rules versus an apartment that comes with its bylaws and its strict rules that you have to abide by. You have to, your monthly maintenance that you have to pay each month. You have to, some persons have a preference. They want the amenities, the tennis court, the pool, or they just don't want, they want to laze around, have 24-hour security, somebody opening the gate for you all the time with an apartment. But some persons just naturally prefer a home. They want their gardening, their own space, their own rules. Maybe it's a little bit more private in their own mind. And so those are some of the, main features that persons would usually use to choose, whether it falls under your personality or your pocket.
Okay, and so basically what you're saying is that there is no wrong answer. It comes down to what your preference is, what you are looking for, and your objectives. Would you say, and Romach, I'm coming to you, in the conversation of apartments versus houses, something that a lot of persons have been saying is that once upon a time, houses used to be the most expensive assets, but now apartments are rivaling in terms of the houses or the cost of houses. Do you think that's because of the amenities that these new apartments tend to offer?
That and also location is very key. So you can get a 5-bedroom house, maybe out in St. Catherine, as you said, St. Catherine, but then you can get a 1-bedroom apartment in Kingston, and it has a greater value, or you command a greater rental income from that apartment versus a bigger house that's outside. So location is actually key as well when you're choosing. So for those of us who may prefer a house, you have to bear that in mind. If you want it in central Kingston, then you have to dig deep in your pockets for that. Versus an apartment in Kingston may be a little bit more affordable in Kingston. So location is key when you're making the comparisons.
I like how Sandra smiled when she said you have to dig deep in your pockets. I like that. Now, while we're speaking, Romach, we're speaking to Sandra, and she's kind of setting the tone and the picture with regards to apartments versus homes. It's a preference.
Right.
But when we're looking at home ownership, there are things that cannot be preference. It's not optional. And this is when we're looking at surveys and valuation checks. It is also something that new homeowners are not necessarily aware of, that this is a part of the process and it's a very important part. For people who may not be very familiar with the process, why is valuation important because it's a cost.
Right.
We work for the deposit, we get the deposit, and then we realize, wait a second here, we have valuation and survey. Why is this important?
All right, so from the valuation perspective, we are trained to provide the client with the market value of the property. So that's what we expect the asset to trade for on the open market between a willing buyer and a willing seller, both acting knowledgeably and without compulsion. Yeah, so that's the framework of us doing our appraisal process, our valuation process, and arriving at the market value. Now, the implication of this is that it helps the client to act knowledgeably, right? So sometimes...
And you can feel free to give us an example,
yes,
paint a picture for our viewers.
All right, sure, be willing to do that. So you will have a case where a client would have signed an agreement for sale, which is a legally binding document, and the agreed price or consideration is $70 million.
Romesh, you just decided to go 70 million. All right.
Well, that's like a regular house in St. Andrew now.
Yes.
Yes. So that's the agreed price. Now, when we do the valuation, we realize that the value of this property is $60 million. And what you would have now is a case where the client would have already committed to pay $70 million, and they would have paid a deposit in accordance to that figure. And so if they should withdraw at this point in time, they stand the chance of losing their deposit, because some contracts are worked like that. So if you do the valuation first, you would know exactly what the market value is, so you can do any negotiation necessary, right? Or if you realize that it, as Sandra alluded to, if it's a win-win situation for you, then you just continue with your transaction.
But it's being diligent.
Yes.
It's being informed.
Right.
And I think I like what you said in terms of not being impulsive.
Right.
Not doing it based on emotion, but by doing it based on fact.
Right.
Now, we're speaking about apartments versus houses.
Right.
Sandra spoke to us from the standpoint of persons can choose. It's their preference.
Right.
Is there any key differentiator, or are there any key differentiators with the mortgage process when valuating an apartment versus a house? No
major difference in terms of the methodology to arrive at the value. What I would say though is that the difference, or how each asset appreciates, comes down to the location of the asset, one, and also what can be done to the asset to improve the value, and by extension increase the equity. Because as you can imagine, apartments, your scope to improve is fairly limited. However, with a standalone house now, that's a different ball game where opportunities are almost endless. Almost.
So that is a part of the consideration.
Yeah, right.
And so if we have anyone who is watching, and Sandra, I'm coming to you, if we have anyone who's watching who, for example, has an apartment or has a house, and they would like to sell it, and they want to renovate, you know, and they look at all of these programs, and I'm at the Pinterest mood board, and they want to fix the particular place, but the location is not necessarily the best. These are things they also have to consider.
Yes, yes, because you do have what is called over-improvement on properties. We deal with that from time to time, and personally, it's painful for me, where persons would spend, say, $12 million improving a property in terms of cost, but the equating value has just moved by $2 million.
The math's not matching.
Right.
All right. I got you.
Right.
I got you. I said I was coming to Sandra, but I do have a question. I live in China. how do I get a letter of intent for a mortgage? That's Jermaine Davis. Would you like to?
Well, I'm not sure what he means by letter of intent for a mortgage.
You're right, Jermaine. I think you probably need to let us understand it more, because when Sandra is in the seat and you come to her, she's gonna help you work through the entire process. So if Jermaine can kind of let us know further, what it is you mean, that would be great.
Maybe he's talking about an approval or a pre-assessment for a mortgage. And he can contact us, because that's a whole nother process.
Correct, and we'll touch that. We'll
Yes,
touch on that in the second part. But what are the primary factors? So we have homeowners, they're interested, they come to you. Is there anything that they need to be thinking about where mortgage is concerned, the process is concerned, when looking at an apartment or a house, or is it pretty much the same?
Well, again, for the most part, I think one of the main things is just budgeting. The different expenses, because again, for your own home, you can take your time to do what you need to get done. But then when you're in a complex and a shared space, if they say this is what we're doing or this is the expense, then you have to share in that expense as well. So those are some of the things that you have to be very mindful of. It will fall under your HOA or your maintenance fees for the most part. But just budget. Once you're buying a house, we'll touch on that later, I guess. But once you're purchasing a house, you just have to budget to have that backup cash or emergency fund, should you need it to do anything at all regarding purchasing a home.
Right.
But the basic stuff, this may help Jermaine, is just getting everything together, make sure you're in a stable job, permanently employed, you have your proof, your evidence of your
Proof of
funds,
income.
yes, income, and of course, manage your credit or your debt very well. Yes, so that way, yes, you have to be able to manage it well, because you don't want to lose your home. It's a critical investment when you do get it. And then it may also prevent you from obtaining it.
Correct.
If you have a bad or a poor credit score.
Correct. And again, for persons who are new to this, what Sandra just spoke about is absolutely true. When it comes to credit, you have loans out there, or you have particular things that you're paying for, but you're not necessarily consistent. When they do the credit report, if it shows that, for example, you don't honor your payments, or maybe your debt ratio is extremely high, that can affect your eligibility for a mortgage. Coming to you, Romach, with the conversation between apartments and houses, and you're the man that comes to the valuation, you let us know what costs what. In terms of long-term investment potential, are there any notable differences between apartments versus houses? You hear people talking about income property. If I invest in an apartment versus a house, is it any difference in terms of long-term investment or valuation?
All right. Based on my experience, the location plays a major factor in that, because you can have a 5-bedroom house in one community and a 1-bedroom apartment in another, and you make more from the apartment. So the location plays an important factor. On another scale, another factor to consider is the potential with a standalone house, where you can make improvements, so you can extend. In some communities you can go upstairs, and so you can have different units within that house to expand
And make it more
the capabilities. Right.
Can go higher or wide.
Higher or wide, right. But remember too that the municipal
It is in keeping with the law.
Right.
And the approval process.
Right.
And the permit.
That's
thereof.
right.
Okay.
That's right. And something I want to point out quickly here as well. So we at JCR Property Solutions, we're client oriented, and so we welcome our clients to call us and bounce ideas off us. So for example, a client with a 3-bedroom house in Havendale, for example, they can call us and say to us, okay, I have $5 million. What can I do with this to improve the equity? And we can make recommendations, say, okay, if you add another bedroom or a master suite, then you're going to be looking at this type of rental income, right? The market value. will likely be in this region. And so what you find sometimes with the standalone houses, you can invest 5 million, but the equity increases by 9, 10 million based on what you do with it.
That. Right now, it looks like house is winning for me over in the conversation. Right now, I'm not here to skew anybody's judgment or to influence. We have some questions coming in. So I'm going to take number 2. I'm going to take this question. Which factors carry the most weight in determining the market value of a property? This comes in from Wayne Johnson. Thank you so very much, Wayne.
Right.
Which factors carry the most weight in determining the market value of a property? Who wants to take that?
Well, I think we have been highlighting that point. Location. Location. Right. That's the major factor. Other things we look at is the building materials used, the finishes, fixtures and fittings, the floor layout. Those things play a factor as well, but the heavyweight is the location and the right. Size. Just about to say that while we're working together, Sandra.
So we're looking at the capacity and the size.
Right.
Okay.
Right.
And I'm going to squeeze in one more question, and maybe this is for Sandra. What is the age limit for a mortgage? Is there an age limit for a mortgage?
Well, currently we give 40 years up to age 70. So you can determine that. You don't want a mortgage for 5 years for sure, so you don't want to be 65 and you just get 5 years because you'll be having a massive monthly payment. So it wouldn't make sense. But then we have options around that, and we can maybe touch on that later, or you can give me a call directly and we can work that through. But just so you know, the tenure, 40 years maximum to age 70. All
right, so we're just getting started. This is just the first segment. This is the warm-up. We have so much more after this break. Oh, hi, guys. When buying a home, it's not just about the inside. The outside matters too. That's why you need a small team to protect your interests, which include a surveyor and a valuator. You can find a list of good ones at myhome.jncb.com. The surveyor will ensure that the land title has no breaches. That can range from a fence being too close to the building to an extra story on the house that shouldn't be there. The valuator, on the other hand, will assess the value of the property to make sure you don't make an offer that far exceeds the market value. So surveyor and valuator checks happen so that you don't end up with the short end of the stick. Happy house hunting. So we know that the home ownership process can be very daunting. We do not know where to start, but we just know that we can't stay in the same position. Now, a lot of us sometimes have a lot of questions, and so we have additional topics outside of the first segment about apartments and houses. We'll be touching on that all-important deposit. You find an apartment, you find a house, you like it, but that deposit and how we get to that state, that's important. Pre-approval, that is a word that's going to come up a lot, and without that process, really nothing else takes place. And finally, to round off things, we will talk about the new NHT External Financing Mortgage Program. I cannot wait to hear more about that. So we had Sandra here. I sent Romach to the kitchen, and now I'm going to invite Kerry McCourty-Simmonds, Sales and Retail Products Manager, Retail Banking Division, into my living room to have a conversation about the all-important deposit. Right, Sandra? All right. So we're going to do all of that, of course, after the break. See, I don't know when I'll be ready to travel again, but I am making sure that I have everything I need for when that time comes. Bam! Just got this renewed. Similarly, when you are interested in buying a house, you need to have your paperwork ready. A pre-approval letter is a letter from the bank confirming the amount of money they will loan you to buy your house. Consider it your house buying passport. Realtors and sellers will know you're ready to go forward, and the purchasing process will be a lot faster. Make your home buying journey as simple as possible. Apply for pre-approval. Welcome back, guys. Thank you for sticking and staying with us. So we know that there is no secret when it comes to saving up for that deposit. It can be daunting. We fear if we'll be able to make it, will we make it in time? But don't worry, that's why we have the experts on my couch. We are going to be discussing the insights, the valuable tips, the practical strategies to get you up, started, and having you meet the goal of getting that deposit. So Kerry, welcome to my lovely living room. I hope make yourself comfortable. Sandra, we still have you in the couch because really and truly, it's one thing to find the property that we love or we desire, and it's like, yes, we want it. But then there's that deposit. Sandra, what kind of numbers and percentages should any homeowner be considering when thinking about a property and that potential deposit?
Well, just so you know, at NCB, we actually do give up to 100% financing to purchase a home up to at least $40 million. Wow. But even though we give the 100%, you still need to have some savings. So I would say anywhere between 5 and 15% of the sale price of the property, you should aim to save that, have that in cash over time, because we give between 90 and 100%.
Right.
So that is where you would want to gauge. And then you have your closing costs or the out-of-pocket expenses that you would want to save for as well.
All right, so we're going to get to those additional costs. But what you're saying is, if you see the property or you have a budget in mind, you should already be thinking whether the institution like NCB is willing to give you 100%. You should be thinking at least 5 to 15% should be where a deposit should be.
Right.
What are some important strategies, Kerry? And the reason why I'm asking you this question is because life is lifing. Can we just all agree that life is lifing? Groceries, gas, just the daily things that we have to get done. And here it is now, we need to be doing saving for this deposit. What are some practical strategies you think we can consider to accelerate that deposit saving progress?
So, Terry, what I like to say to customers first and foremost is understand what is the difference between your savings account and what is the difference between your transactional account.
Why are you mashing my corn dough?
Because
I'm feeling a little bit attacked, Kerry.
I really want to put the heat on because the truth is, a lot of us, what we do is that we have all of our monies in the savings account, right? And when we go out, what we do is that we make that impulsive purchase. And we're not even considering that the funds that we're using to make that purchase is the funds that we were saving for a house or for whatever kind of property or investment that we need to have. So first and foremost, I say to my customers, let us differentiate your monies between your transactional account and your savings account. The second thing that I want our customers to consider and viewers to consider is that you need to understand what you can afford to pay back. So one of the first questions that you should ask when you're thinking of purchasing a property is, how much can I pay back? Have that conversation with your NCB mortgage officer to find out, okay, should I be looking for a house for $70 million, as Romach said, or should I be looking for a house for $35 million or even $100 million? Because what you don't want to do is that you don't want to buy a property and then you have buyer's remorse because it is something that you could have, one, afforded more, or two, you have now purchased this property and there's nothing else that you can do but pay your mortgage.
Wow.
Right? So that for me, those are some of the important things that our customers really and truly need to consider. As Sandra said, even though we give 100% financing, it's always important because especially if you're buying a property that it's not a new property, there is always going to be that thing that is going to happen. And even if it is moving ready, as you move in, the pipe bursts.
Facts.
Yes?
True.
Right. So you have to ensure that you have some monies put aside. How you can do that is that you have the conversation with one of our officers, I said. Make sure you understand how much you can save each month, how much you need practically, and how much you need to put down. And once you do that, you set up your standing order, move your monies from your transactional account into your savings account. You need also to determine how long are you going to save for or to get to your goal, because the truth is, if you need to have $3 million or $4 million or $10 million, whatever the amount is, you know your pocket and you now know how much you can afford to save each month. So you ensure that you have those kind of discussions, those kind of conversations, because if you don't, what's going to happen is that you're going to buy this property and then you're going to be in a lot of stress.
Absolutely. And you said, for example, to have the conversation with the NCB mortgage officer, because that's important to help you navigate and to ask questions that maybe you have not considered. Are there any specific products at NCB that can help persons say, apart from the standing order, which is a process, but are there any products that NCB offers that can help with this deposit saving process?
Of course, we have several different types of savings account. It all depends on what the customer wants, and we also have our fixed deposits. So truth be told is, you start your savings in your savings account. You move your money from wherever into the savings account. But if you're saving over a long-term period and you're accumulating a large amount of cash, you want to move this into a higher yielding investment instrument, right? Because you don't want to have a large lump sum of money sitting in your savings account for a long period. It's not working for you. And especially because you're going to be purchasing a property, you want to maximize on the returns that you have today, because you're certainly going to need it tomorrow.
I love that answer.
It's never too early to start.
It's never too early. And that is something that I have realized. It helps the earlier you start, it also helps with just consistency and discipline. And by the time you look, honestly, so that is how I actually started saving. Kerry, to be very honest with you, I had money come out of my account, never looked at it, did not have access to it, did not have an ATM card, a debit card, did not have access to it. And I was really shocked to see that when I really needed it,
it was there.
It was there, and it made the process so much easier. Where I could have just kind of I just could have made a sigh of relief. Sandra, this question is from Hear Me Out Live Uncut, and the question is, what determines the approved percentage for a person, whether, for example, they get 90 or 100%?
Okay, so that person sounds like they're interested in the 100%, I'm sure. So for like the 100%, most persons will qualify for the lower amount, which is the 90%. Again, it depends on affordability, as Kerry spoke to earlier. What can your pocket afford? But for the 100%, yes, once you can afford it, and it's your first home, we're helping all persons just like the NHT, helping you to, making your first home more affordable or achievable. It's up to 40 million, the price range, because it's the pricing of funds. You don't want to go to 100 million. We don't want to give you 100% for 100 million. We want to give it to the person that really, really need it, and need the help. And it's for most times young professionals. You're just starting working. As Kerry said, it takes time to build up the savings. So you may not have it in time, but you can afford the monthly payment. So it depends on your credit score again, your rating. So those are some of the factors: your affordability, your first-time home owner, up to 40 million, and your credit score will determine if you can get the 100% financing. 95%, yes, we do an assessment as well. It's up to you to choose if you want the 95. There are some limitations with that, like the tenure is 35 years versus a 40-year. But and again, if you can't afford that 10%, so if the home is 40 million, 10% is 4 million. You may just have 2 million. So this is where we help you out with the 95%. So you just need to find the 2 million. And guess what? We make it flexible. The vendor may demand that you pay 10%, the 4 million, and you may have to break your savings for that. We still give you the 95 and give you back that 2 million as a lump sum in the end, Terry, so that you can put it back in your savings and your wealth, you can keep growing.
And it sounds to me that this is an ongoing conversation. It isn't hard and fast. I think a lot of the times the questions come in a certain way because we believe it's either black or white. But I've come to understand in this mortgage process that there's a lot of gray area, and there are areas that are flexible, with depending on where you are, what stage you are, how old you are, what your affordability is. And what I will add to what Sandra was saying about your credit score is you don't have to wait, and I suggest that you don't wait until you are looking for a property to find out what your credit score is. The same time the bank is finding out the credit score. That is something that you can do independently, and you can actually make appeals. Which is something I did when you've had credit cards that you closed, but they may still be
appearing
on repair, appearing on the report, and may give a false report. And so it's important for you to stay on top of your credit score, so that when you're coming now, you know exactly what your standing looks like. So let us talk about the pre-approval process. Okay, I was a homeowner. I was interested, first-time homeowner, found a place I really liked, walked in, said I liked it, didn't understand anything about mortgage. By the time I called my friend and said, I found a place, I was asked, do you have your pre-approval letter? And I said, what is that? Well, by the time I asked, what is that, the place went.
Yep.
And
Yep.
are people laughing in my living room? Are people laughing in my living room? And so I understood that it's important to have that pre-approval letter and to go through that process. Ladies, for people who may not have a clue, like I didn't years ago, what is that? And how important is that process to starting your road to home ownership? Kerry, you want to take it, or Sandra?
Go ahead, Sandy.
Well, what I've always been saying, it is very important. Don't start looking before you know. So it's always good, even if you think that you're not ready, because persons will say, I was really ready, but this opportunity came up. So it's always good, Terry could have gotten a big boof, like, oh, you 40 million, you can only afford 20, so.
Can you imagine?
But, or she's limiting herself looking in the 40 million, but they say, Terry, you can get 100 million, so it can work in both ways.
To God's ears.
So, amen. So, it's good if, you come in, there's a difference as well with a pre-qualification letter as against a pre-approval at NCB.
Okay.
So a pre-qualification is something that you want to move quickly on. So we do a preliminary basic assessment with some information like your income and your expenses and so on, and we can tell you. Now we take you to a more official approval process called the pre-approval process, just on the income side.
Yes.
It's not tied to a property.
Right.
So especially for persons overseas, we recommend that because, as you said, anything can pop up. Anything can happen. So we on the front can give you a pre-qual and tell you can get X amount. But then when we put it through the rigor, through the assessment with our underwriting unit and our underwriters, which is our credit risk persons who do the final assessment, they're the final approvers, they can say, no, this person can't get it. So at NCB, we encourage that. So you go through that official process, and then we take you there and you know for sure, and you can go shopping confidently knowing that you can purchase a property within this price range for sure. And actually that lasts for 90 days. So we don't need to assess your income again within that 90 days for the pre-approval part of it. You find the property, bring the documents that what Romach talked about earlier, which is the valuation report, etc. And then we just close it out by assessing the property, make sure it's suitable, and we close it right there. So the process moves much quicker that way.
Beautiful. You mentioned the valuation process. Of course, the survey, the survey process, all of that takes place while the person has their pre-approval letter and are looking in the market?
Right. So they can come in for it. So they can get the pre-qual is like your case where you're trying to rush. We don't recommend that.
I didn't get through.
Option, right. So you want to be prepared, but if we're pre-assessing you and you say, boy, something came up, before you even get the pre-approval, we can say preliminary, it's looking good. Here's your pre-qual, you can put your offer in. But while we're assessing you on the official side, because we want to make sure that we're right there with you and we don't want you to fall into a disappointment.
Correct, above.
So we want to make sure that we get it right with you, and then you shop confidently for sure. And then we give you a 3-month period, get the reports done, get the property side, that's what we call it.
Yes.
All those documents in, and then you would already have been halfway along the journey.
Beautiful.
By that time.
Kerry, let me come to you because we were speaking about the depositing process, the practical tips and strategies to start getting your accounts ready, have your money ready. Sandra just mentioned something, the valuation and the survey, which is a cost. It is an expense that a lot of people don't know about, don't consider, because all they're thinking about is the deposit.
Yes.
So in addition to the tips that you're making or giving us with regards to the deposit, while we're talking about the pre-approval process and there are these reports, how else can you recommend anything else that persons need to do when looking also at possible valuations and survey reports, which are a percentage, I think, of the value
Yes.
of the property.
All right, so I did mention that it's important for customers to understand how much money they need to save, when they need to save it, how they need to save it, and so on and so forth. It's also important for customers to consider what are some of the expenses that I need to cut right now, because the truth is, if I'm going to make this big purchase and if I want to save a particular amount by a particular time, then it may mean that I may have to cut some of my expenses that I have now. You have to do a deep introspection and look at all of what you have going on. Is it that I can continue to do these things whilst I do have my mortgage? Or is it that I may have to look at another thing too, is earning another income? Because maybe I am doing a job, but the amount of money that I have now coming from my job is not going to be enough to cover the cost of all the costs that are going to be associated with the mortgage, with the deposit, with the down payment on the house, all of that jazz. So we need to look at what else can I do? How else can I save? Who else can I talk to?
Right.
Sandra mentioned earlier that you customers can also look at getting, even if you want, like you want a 95% financing, but the seller needs 10% upfront, we will give you the 95% and then give you the difference at the back end. These are some of the things that we also, as purchasers, need to consider. Should I take my money out of my account and pay, or should I really think of taking an additional fund or additional funds, because in the eventuality that anything happens and I have these money set aside?
So let me ask you this question, and this is not a hard and fast, and we're not going to hold you to it. When we asked the question about the deposit, Sandra said, have 5, 10, 15% deposit is really interesting, is really important, and it's safe. If we're considering the valuations report, the survey report, there is a closing cost, stamp, by the way, transfer,
Registration.
by the way, there are a lot of other things.
Insurance, by the way.
Insurance. While we're thinking about getting the fancy house and the fancy apartment, please understand that before your process finishes, they're going to tell you have to insure your asset. So how much? 5 and 15% was for
Well,
the
that was
deposit.
included.
That was included.
Yes,
Oh, I thought it was going to go to like
Because
50%.
remember, if it's 100%, that 5% is for your closing costs and the other expenses.
It is a little bit. Okay.
No, it's really
5
about
to 50%. So 5 to
yes,
50%
is good.
is a good place to start.
Yes.
I have a question. When a customer starts a mortgage 30 years, are there penalties if they pay more towards their mortgage? Which I think is a question I've always heard. So imagine we go through the process, we come to the agreement, this is the amount of money I pay for my mortgage every single month, but now I've been promoted. I'm making more money, or maybe I do what Kerry said, I have a second job now bringing in more money, and now I can pay more money monthly to try to get rid of my mortgage. Is there a penalty, or does that happen if I do that within a certain time?
No, well, within the first year of getting the mortgage, we wouldn't encourage that for sure, because you're just starting out. Again, it's good to talk to us, because instead of using that money as well, there's the option of saving it for your second home. Right? So you don't want to lose out. Win-win we're talking about. But yes, but even if you want to pay towards, some persons say towards the principal, it's an instruction that you would have to write to us at the bank, the branch where your account is held at. You address it to the branch manager, because again, we can't just go in your account and say, oh, you want to pay this extra 10,000. You have to give us the instruction or the authorization to say, I have had a lump sum of $1 million, I've saved this over time, or I get a big bonus, I want to pay towards my principal. Please to debit my account X. It's just a matter of writing and instructing us how much you want to pay, at what point, and then most important, what do you want to happen after? Do you want your payments to remain the same?
Right.
Do you want to rephase it so you have a much lower monthly payment? Is that your goal? Or is your goal to cut down the tenure? So you want, yes. So, I mean, you can let it remain the same, the monthly payment remain the same, And then you cut down the tenure with that. But then if you want to rephase it, it stays the same, but you have a more comfortable, lower monthly payment.
Beautiful. Loved your answer.
But no penalty after a year. You just give us the notice and there's a little processing fee. Very small, very affordable. But yes, but you want to be able to manage it. Maybe once a year, once every 2 years. Again, as Kerry said, you save and you save towards that. But then you have to weigh, because suppose you have it in an investment that you're earning good returns on, you know. You want to make it stay, because comparing to what the rate maybe at the time, it's still affordable. You can, and you're still earning from it. So you would want to make it stay. But yes, you can pay towards the principal. There's nothing stopping you from doing
Right, and I guess for me it would be, if I were to pay this lump sum, how significant
It is.
would I want to take up a lump sum of my liquid?
Yes.
If it is not going to make a significant dent in my tenure or my monthly mortgage.
Payment,
So you really brought up some very great considerations, but we still have a lot more. I cannot wait to hear about the new NHT External Financing Mortgage Program, and that conversation happens on the other side of this break. So you've done your research and you think you're ready to buy a house. Great. But before you jump in, do you have enough savings to cover all your expenses? You likely have put money aside for your down payment, but have you remembered the other costs involved? For a home to feel like a home, you'll also need to consider the costs involved with living in it. You likely need to buy new furniture, appliances, insurance. Each on their own may seem small, but together they can cost a whole heap. It sounds like a lot, but there's no need to panic. Just make sure you start saving early, so when the time comes for you to buy your dream home, you have the money ready and waiting. Visit myhome.jncb.com to start the process. Saving doesn't have to be hard if you have a plan and stick to it. Hi, welcome back again, guys. Thank you for sticking and staying at NCB's Mortgage Live. Really nice, spirited conversation. Hope you're getting very important insights and information that you can now use and arm yourself to go and get that apartment or that house, whether it is your first one or your second one. So we spoke about apartments versus houses. We spoke about getting that deposit and that pre-approval process. And I've just heard about the new NHT External Financing Mortgage Program. And for those of us who understand, NHT has always been a strategic partner in trying to assist more people in getting their homes. Now, one major step in that direction will be piloting a new mortgage financing model, which we were just speaking about. And NCB has signed on to the program. And here to give us more on it, of course, is Sandra. You are our mortgage lady. Now, what is the External Financing Mortgage Program? What makes it different or better?
Okay, so what we call the External Financial Mortgage Program, or for short, EFMP, it's new and improved. You know, as you said, NHT is partnering with financial partners to make the process more flexible, more convenient for the customers. But currently, NCB is the only bank so far that has joined on this new program. So what that means is that you can enjoy all the convenience, all the flexibility, even the 100% financing I spoke about earlier, versus doing what you call a pari passu arrangement, where you have to go to NHT now to apply for your NHT and then go to the financial institution to get that second portion. But that's limiting you to only 90% if you do that option. So under the EFMP, when you join with us, the process is much smoother. The online is not fully up to scratch, but that's the intention where they want to go. And if you claim your refund like I do every year online with NHT, you know how simplified that process is and it works.
Correct.
That's exactly where they want to take the EFMP program, where you go online and you apply and you can get your, like, an eligibility letter or pre-qual letter from them. Or when you take it to the serious step, you select your financial institution, which would be NCB. We would get your eligibility letter sent to us in the back end electronically.
Lovely.
So we would know. So that's where you make your application, you know, self-help, empowering you all. And then you can, once you come on board with NCB, then you can avail of all the features and the benefits of the mortgage program. You won't have the limitations.
Beautiful.
And you can still apply under that program for your refund annually when it gets to that stage. Versus if you do the pari passu when you go to them, it goes towards your mortgage and the principal.
And this is if you're trying to be a homeowner for the very first time, or?
Yes, first time homeowners. That's what NHT will give you for. That's when you would make the application, because once they have you in the system as having applied, you would have to wait 15 years before you can apply again. And I think that rate is going up from 2.5 to now 3.5 as of July 1. So that's one of the changes to come.
Got you. And so those were the differences between the, what you call it, the EFMP
and
versus the current joint, or is that something separate?
No, the joint was similar, but it was more manual, paper-based, like you take the stuff in. But this time you're more empowered, where you can go online and you apply directly in the system. You don't have to go to NHT. You don't actually have to come into us directly. You apply for your NHT letter online, and then we will do the entire process of the mortgage. With the NHT portion of it, the benefits, guys, you're not losing anything. You will still get your maximum benefit and the percentage rate as NCB would have approved you for.
So it's very
NHT.
So it's very seamless, and we're not sending the potential homeowner all over, back and forth.
Exactly.
It's really you guys coming together and allowing this process.
Like a one-stop shop, yes.
That sounds amazing. And we said that the persons who are best suited for it are first-time owners. And is there a particular limit in terms of the amount? So, for example, 100 million, 50 million, is there a particular, is there a cap?
Well, currently, each person can get up to 6.5 million. As of July 1, which is basically a month away, each person can get 7.5 million
But
for their benefit. 2 persons joining can get $15 million versus 13 now. So if you want to wait, guys, now is a good time to wait a little bit. And 3 persons can now join, but there's a limitation where you don't get 7.5 million each, you get 21 million in total. So basically 7 million each.
And
so 3 persons can join now.
And let me ask you a question. Do those 3 persons all have to be first-time homeowners, or can 2/3 be first-time home? And I'm asking for a friend, right? Asking for a friend. You guys can drop it in the chat. Terry is asking for a friend. If there are 3 people who are signing up, and we know that NHT is really trying to get home ownership to be accessible to as many people as possible. If you have 3 of you coming together, and maybe 1 person is already a homeowner, but
well, if they're already a homeowner, they would have never borrowed from NHT before. They would get that 3.5 million instead of the 7.5.
Got you.
And I should also say that, you know, they make it more affordable as well, in the sense that 1 person can actually now get up to $8.5 million. Once you're buying a property, that value is up to 12, or being sold for up to $12 million. So property up to 12 million, you get 8.5 million for that 1 person. So you get more help, seeing that it's you alone for a lower price property.
Sandra, I just want you to know that your information is probably coming up in the lower thirds there, so I'm sure your phone is going to blow up tomorrow, because I think a lot of the times we hear these terminologies, but without conversations like this, it's very hard to understand if it applies to us, if it could apply to us, what are the possibilities and the other considerations. I think hearing you explain what that can possibly look like makes this so much easier. And so the benefits is that you actually get a lot more money afforded to you in order to help you along the process.
At 0 to 5% from the NHT, 0 to 5%, yes.
And just because, I mean, you're not here representing NHT naturally, you are just a financial institution that has partnered
with them
to make the process easier for your customers.
Exactly.
Just because we've touched the topic of persons who can pool together for to get the NHT benefits, are there any considerations that our viewers should be having if they are possibly thinking of pooling with people?
Right, so if you're going to be pooling, of course you want to be pooling with your family members that would have vested interest, you know, like your spouse or your siblings, parents. Sometimes the parents haven't used their NHT benefit, but the difference is if you're taking, so if Terry wants to purchase a home and she's getting her brother's or mommy's NHT benefit, once upon a time they could just apply for it and give it to Terry and sign something to say they have no interest in the property. But now they all have to be on the title with you. So persons have to consider that. So once you're getting somebody's, or you're joining together, then you can also join together and, use it, as Romach said earlier, you want to expand the property as well and have income coming from it, rental income where everybody benefits.
Right.
So you can use, your mind, maybe have a relative overseas who is paying their NHT and the benefit, but they're not interested here, but it's good to invest still with them. Yes, so you can join with them as well, use the benefit, and again, you have your legal persons who would have to be advising you how to do your joint tenants, your tenants in common. That's another conversation.
Of course. This kind of conversation
yes.
about home ownership can go on forever.
Yes.
I have a question from someone who is watching online, but we're going to take a quick break and then we'll get back to that question. I love a project. Whether it's something small like this or big like buying a home, one thing I've learned is if you don't follow the right steps from the start, you're bound to suffer in the long run. So do your research and make a plan before starting the mortgage process. Organize your documents, read your instructions, and stay in touch with your mortgage officer. Find out how much cash you would need up front to cover your insurance and transfer costs. Focus on the task at hand, and it will all be worth it in the end. All right, welcome back. Thank you guys for being here. You came in on time at 7. You've stayed with us. You're commenting, you're asking questions, you're participating, and we absolutely love it. Speaking about participating, there's a question from Georgia Gordon. Thank you so very much. She asks, I have an existing loan with another bank. Can I call NCB, that's you, Sandra, to take over that loan if NCB offers a better or lower rate?
Yes, you can do that. It's what we call a mortgage refinancing or a mortgage switch. And guess what? There are no commitment fees with that switch. So we save you that expense for sure. But give me a call and I can definitely guide you as to how easy, we can assist you with that.
Sandra, I like that. And that is called refinancing.
You can consolidate debts under that refinancing as well. Do your renovations, your upgrades under that facility against, again, the value of your property. Beautiful. That we spoke about earlier. You're increasing in value, so you use it, you leverage it to help you in so many different ways.
Beautiful. Well, as you guys can see, or maybe you're seeing right now, I've invited all of my panelists. They're on my couch, Romach, Kerry, as well as Sandra. This is where we're going to really allow you to ask your remaining questions with the time that we have left. A question that came in asked, what makes a person ineligible for a mortgage? And I think we can probably deduce when you said, for example, they need to be employed, they clearly need to have some amount of income that is coming in. Is there any other things that can make someone ineligible?
Right, as Kerry said earlier, you have to be saving. So you have to have the savings, because when we assess you, you may not be qualified or eligible for the 100% or even the 95%. So you'd become ineligible because you may be able to afford the monthly payment, but then you can't find, and you don't want to borrow again, because if you borrow, it's going to impact or negatively affect what you could afford prior to you borrowing that additional loan. So it's your income, your expenses, your credit score. Right. Those are the things that usually makes you ineligible.
Okay. Yeah. I have another question here. How do you treat the increasing competition in the real estate market and the time taken to have a valuation report done? Romach, is that your question? So how do you treat the increasing competition in the real estate market and the time taken to have a valuation report done? Is it long for people who may be new to the process? Right. Is it long, tedious? Does it take 3 months for you to come back with a report? Explain to them what that process is like.
All right, so we have a turnaround time of 5 working days after inspection, which I believe is fairly fast. And we've also done next day service when persons have dire needs. We've actually assisted an NCB staff member with that already. Yeah. Yes, he had an apartment to value, and he needed a report urgently, and we said, okay, we can have it for you next working day, same quality, and his documentation went through. So right. So in terms of the competition, though, we pride ourselves in providing quality service and also a quality product. So we don't compromise on that any at all. And in order to arrive there, we have to put in quite a bit of work. So we price our product accordingly. So what I can confidently say is that the top valuation firms, I say about the 5 or 6 that does quality work, as we do, we are amongst the cheapest of the best.
We like it if we can get our best bang for buck.
Of
course. I think going back to what Kerry and Sandra said earlier, if you're doing your process, if you're planning and strategizing, and you're really lining up all your ducks, even though the competition, real estate, things are going very fast. People come, people buy, people make offers, people negotiate, people bid. It's a lot of things that go on in the market. I think if you're doing everything that you're supposed to do, you're bringing in all your documents, by the time you get around for the valuation, if you have all your ducks lined up, you'll realize that you'll still be in the running if you want a property, but you can't do everything now for now. You kind of have to start preparing everything.
But what they need to understand, the valuation report is mandatory, always. So you still have to bear that in mind. It's not an option.
No, absolutely. And I think we said it at the top of the program, where preference for apartment versus house is a choice, but when it comes to surveying and your valuation, those things have to be a part of the process. I mean, this is a conversation that could go on forever. I know persons have a lot of other questions, especially as it relates to them. I'm going to give you guys a minute each to share with our viewers, what is your home ownership top tip? If you could share one out of all of them, what would they be? Starting with Sandra.
I mean, there are so many things to consider. But as I said, I mean, it's just to save, this is what you're comfortable. You know, are you purchasing for investment? Or are you purchasing for, you know, you want to live in that property? So my tip is just to assess what it is that you're looking for. Don't beat up on yourself because you can't afford the big home or the big house. You want the house? You can start by investing in an apartment, a studio, 1 bedroom. Let that income, rental income, work for you. Build it over time, because we do accept rental income as support income after 1 year. So yes, it's in addition to your income. So you can invest in that, build your wealth, and that's another way to build your wealth. Yeah, so, right.
Great.
So so you can consider that as a tip. Don't be boxed in that I have to live in the property when I am just buying it.
So know your why. Know your why, and let it be your reason, and not looking at anyone else. For you. And let it work for you. Kerry, your top tip.
So for me is start saving early. Somebody alluded to it earlier in the conversation. Do not wait until you're 45 and you're 50. Start saving very early.
Why are you looking at me?
Start saving very early, Terry, because it's going to be more important for you, and it's going to work out better for you in the long run. Because what will happen is that if you try and get your first home, house, apartment, whatever it is, very early, it gives you the opportunity to get another investment property, or to get an investment property as well. And we all understand that, especially if you're working, you're not self-employed, the pension alone will not be able to carry you after you have retired. So if you can get something else, investment, after you've reached the age of retirement, then it's always going to be good for you. And we're not talking about 1 and 2 and 3. NCB will give you as many mortgages as you can afford to repay.
Hey! So know your why, start early. Romach, in a minute, your top tip.
All right, so we love a good customer experience. So we don't only collect for a valuation report, but we want to see the client getting through to the end of the transaction. So for me, one of the things I realize happens a lot, and I believe somebody asked the question earlier, major driving factors of value, and Sandra took the answer off my tongue, where she mentioned size. So size of the land, and size of the building as well. Now, apartments, houses, what you find is apartments are relatively small compared to houses. And so the replacement cost or the peril insurance is not something that most first-time homeowners know about. But the cost of the insurance depends on the size of the building. So what you'll find is sometimes a property values 30 million, but the insurance cost on the house can be 50 million based on the size of the building. So if you come to us in a timely manner, we can advise you that this is the replacement cost, and then Sandra can tell you now that based on this is what the insurance will look like. So that's a factor to consider when you're looking at apartments versus houses.
We appreciate that tip. These
Right.
are our home ownership top tips. I want to thank Sandra, thank you Kerry, thank you Romach for really packing us up with so many insights in just an hour. For those of you asking if this stream will be available after this live broadcast, it absolutely will be available on the NCB Jamaica YouTube page. And my tip is ask your questions. Call in, don't be afraid, don't be ashamed, don't be embarrassed. That is the reason why your NCB mortgage officers are here. So I would say if you're in doubt, you're a little bit confused, you're not too sure, you're getting a lot of conflicting information, pick up the phone, come on in and ask as many questions you would like. Again, I'm Dr. Terri-Karelle Reid. It was a pleasure serving you in the capacity of host on NCB's Mortgage Live. We will see you for the next one. Thank you so very much. Bye guys.
Bye.